What's going on, guys? Andrew here, and today we're going to be talking about another SPAC, which is Psth, and it was started by the legendary investor Bill Ackman. It has a lot of big names backing it up, and it's also the largest SPAC ever. Now, Psth definitely has a lot of hype around it, and it's trading well above NAV, but I do think it's going to live up to the hype, and it's going to exceed expectations. And in this video, I'm going to show you why it could be a really good investment for you, and why there's so much hype around it. Now remember, guys, this is not investment advice. This is just my opinions that I'm presenting, and make sure you do your own research before you invest into this SPAC. Also, if you like the content, make sure you subscribe, and without further ado, let's get straight into it. Now, if you don't know who Bill Ackman is, he's a hedge fund manager and the founder and CEO of Pershing Square Capital Management, and he showed excellent returns within the past few years, most notably last year having a 58% return, and then this year with a 70% return. His 70% gain in 2020 was due to investing in Hilton, Lowe's, and increasing their position size in Berkshire Hathaway during the bottom of the market. He's also known for making one of the greatest trades of all time, where with $27 million, he turned that into $2.6 billion during the pandemic, betting that the stock market would continue to crash. Now, Bill has a proven track record, and he's done extremely well over the past couple of years, giving investors a lot of faith into him, and we're going to go over some of those big names in just a little bit. Now, let's first look at the structure of the SPAC, and it's a Tontine SPAC, and forgive me if I pronounced that wrong, I kind of just looked it up, but this was where investors would pool their money together, and you would get rewarded for actually surviving longer. So what would happen is when an investor died, a new investor wouldn't replace them. Their money would just split into the investors that are surviving. So it rewards you for surviving the longest, and that relates to Psth because the longer you hold the shares, you actually get rewarded. And the way that this structure works with a SPAC is that Psth is going to be rewarding all people who hold their shares 30 days after the merger, 2/9 of a warrant. So basically how this is going to work is if you have 9 shares, you're going to be getting 2 warrants. And exercising these warrants is pretty similar to options. So you get the ability to exercise these for $23 a share. And let's say Psth is trading at $30 a share after merger. For some reason, it's at the same price. Then these warrants are going to have the value of roughly a little over probably $7, maybe more, because they get the time value, which is going to add to their intrinsic value of $7, which is the difference between the $30 strike price it's at now and the $23 price that you can redeem it at. Now, that's not even the best part. Remember the Tontine structure that we talked about? Well, that's the same thing in Psth. The people who sell before the 30-day period is up after merger, their 2/9 warrants that they get for being a shareholder gets distributed to all the other shareholders that didn't sell. So you're getting even more benefits for holding on. So Psth is a bit different because, as we explained earlier, it is the biggest SPAC that has ever been created. So the net asset value, or the NAV, is actually going to be $20 instead of what you normally see, $10. As you can see, we're on the S1 filing right here, and they distributed 200 million units at $20 a share. So that provides you a $20 floor plus 2/9 of a warrant for every single share, plus even more of a floor because you're going to be getting the 2/9 warrant per share from the people that sold before the 30 days were up. So Bill is just giving you so many reasons why you should invest in this company, and they are really looking out for their shareholders, which is something as an investor I really like. And Psth's initial capital is $4 billion, but can be evaluated up to $7 billion after merger. So Psth Klarman is the owner of a hedge fund that just started, and he just recently put $400 million into Psth. Now that's weird because Psth Klarman is known for being a value investor. People have called him the next Warren Buffett, and you don't normally see a value investor putting a bunch of money into a SPAC, especially when the SPAC does not have a target yet. So either Psth Klarman knows something about the potential target, or he has that much trust in Bill Ackman. Now keep in mind that this screenshot was taken over a month ago, so the position sizes have definitely changed, but these are the top holdings for Psth currently. Number 2 is Psth Klarman's hedge fund, and then number 1 we have Guggenheim Capital, which has over a $500 million investment. So there's some big names in here that are putting big investments into a company pre-merger. So I think that's really odd that people are putting so much money into a company that doesn't have a target yet. I think a lot of them just have faith in Bill Ackman, which is why I do as well. So now we can start talking about some of the possible targets that they're looking at. But the first one I want to get out of the way that is not going to happen is Chick-Fil-A. For some reason, people got their idea in their head that it's going to be Chick-Fil-A because Ackman is known for investing in restaurants. but the reason it's not going to be Chick-fil-A is that Truett Cathy, who started Chick-fil-A, made his children sign a contract that they will never let the company go public. So that's not going to happen. I just want to ruin everybody's dreams there. Unfortunately, Chick-fil-A will not be going public. Now, if you've heard anything about PSTH and its rumors, you've heard about Stripe. Now, I'm going to be going over the possibilities on why it could be Stripe and why it also might not be Stripe. And Stripe's a payment processing company pretty similar to what PayPal and Square do, and one of the PSTH team members actually used to work at Square as the executive chairman. Now, she previously served on the board of Alibaba and Social Capital Holdings, which just recently acquired SoFi, which is another finance company. Now, Jacqueline has a lot of experience when it comes to the financial tech sector, and she would be a really good help to PSTH if they wanted to acquire a financial tech company such as Stripe. Now, as you can see from the screenshot, they are also hiring people with SOX requirements, which would only be needed if you are willing to take your company public, whether that's the IPO route or the Spac route. Now, I was doing some digging and scrolling through PSTH on Reddit, and I actually found this. And make sure you take this with a grain of salt, but I was doing some digging, and as you can see, YOLO Capital Management, which is kind of just a meme account, and he posts all about PSTH, he follows all the Stripe guys, he really is convinced about Stripe. Now, the funny thing about this account is that if we go to John Carlson's Twitter, who's a co-founder of Stripe, and we go under following, as you can see, if we scroll down, he is following YOLO Capital Management, a meme account that posts only about PSTH and Stripe merging. Now, why would he do that? I don't know. Am I digging a little too deep into the rabbit hole? Probably, but this is definitely some interesting information. Now, for some more evidence, I want you guys to pay attention to this clip.
I'd said previously, I was asked by, at a business school by a student, what's the single best business in the world? And I said, if you could own a royalty on people spending money, like Visa or MasterCard, it's the greatest business in the world. And if that ever became a public company, you want to buy that company, or if you ever could buy that company.
Now, we said the best business in the world is owning a royalty on people spending money. And now what does Stripe do? They own royalties on people spending money. Now, one of the first rebuttals I'm going to go over for Stripe is their valuation. Now, they've significantly increased their valuation from in April at about $36 billion to now over 70 to even closer to $100 billion, which makes them one of the most valuable companies in the world, and that would really press Bill Ackman and PSTH for money. Now, they did say they want a minority stake, which I'm assuming is around maybe 10 to 20%, but they would be pushing it. They would have to use all their funds for that 10% stake at $70 billion. Now, some more evidence leading to the side of no deal is a tweet that Patrick Collison responded to denouncing that PSTH and them have merged, which I don't think really says much because, of course, they're not going to merge yet. And, of course, he's not going to respond to a Wall Street Bets Twitter account saying that they merged. That's not going to be how they reveal it. And I think he was just saying there wasn't a deal at the time, because this was a month or two ago, and of course there wasn't a deal yet because I'm making this video right now. Now, is Ackman willing to pay up for a minority stake in that company? And is the Collison brothers willing to take the company public? We're going to have to see. I do think Ackman is willing to pay up for it because he said that was his greatest mistake, was not investing in MasterCard and that type of business. And of course, we're going to have to see what the Collison brothers want to do. Now, something I could see Stripe doing other than going through a SPAC like PSTH is doing the initial public offering, the traditional route. Now, the reason I say this is if you paid attention in 2020, Airbnb, DoorDash, Snowflake, a lot of these companies that IPO'd actually IPO'd at extremely high prices, way higher than they filed for. As you can see from this article, it says Airbnb initially went for $47 billion and opened up around $100 billion. So what Stripe could be doing is they could get this crazy high valuation when they open and do something similar to DraftKings where they do a stock offering and raise capital that way. Now, despite the CEO's comments on Twitter, Stripe is still my favorite for PSTH to merge with, but another rumor is going to be Bloomberg that a lot of people are talking about, and Bloomberg does fit, but as you can see from this article right here, that they actually denied the claims that they were talking with PSTH and do not plan on selling any part of Bloomberg. Now, this report was back on October 21st, so talks could have changed then, but it doesn't seem like there is any chance that Bloomberg and PSTH merge. Now, another company that a lot of people are looking at is possibly Coinbase. And I can definitely see where they're coming from because Coinbase is very similar to Stripe to where they get royalties off people spending money. And as you can see from the screenshot I found on Twitter, they're hiring people with SOX experience, which is what you need to go public. Now, the reason I don't think it's going to be Coinbase is because I can't find anything on Twitter or Google about Bill Ackman talking about cryptocurrencies. And he's usually a very vocal guy. So it's kind of weird that I can't find anything about him talking about cryptocurrencies. Maybe he doesn't like it. Maybe he secretly does. I don't know. But also Seth Klarman has come out saying that he thinks cryptocurrencies are like the Dutch tulip mania bubble. If you don't know what tulip mania was, it was basically just a huge crash back in the 1600s where tulip prices were super inflated and it became a bubble and they eventually collapsed. Now, I don't think a guy who has $400 million into a Spac wants to invest in a cryptocurrency exchange. Now, some other rumors are Subway. Now, there's also a rumor about Menards, but neither of these rumors really have any substantial evidence back behind it other than that they are mature unicorns. Now, one more rumor that's been going around the internet is Starlink, but personally, I don't think Ackman team is fit for this type of industry as none of them have really any experience. And also, Elon has said that he does not want to go public until they can fly back and forth from Mars, and we know that they haven't been able to do that yet, so I still don't think this is in the running. So all the evidence pointing towards Stripe and also the tontine structure of the SPAC, I am going to be investing into PSTH. Now, make sure you guys do your own research, of course, but I do think with all the evidence that I showed you guys that it's going to be Stripe. So, other than that, guys, that's going to be the end of this video. If you guys enjoyed, if you made it this far, I appreciate you so much. Coming up on 500 subs, let's hopefully pass that this week. Other than that, I'll see you guys in the next one.